Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Good morning, everyone. Welcome back to another live stream. Happy Wednesday to you. Hope you're doing well. We got 160 people tuned into the stream so far. Just giving everybody a second to join into the action. Like you saw in the intro there, check out DNA Funded. They're doing 20% off with this promo code they gave us, A1T20. Link is in the chat and in the description down below. As per usual, we're going to be taking a look at some setups. We're going to look at the markets, see what's going on out there, and talk a little bit about what we saw at the start of this shortened trading week. Now, I know not everybody had a holiday on Monday, but here in the States we did. And so the markets got a little bit of a slow start here, at least with U.S. traders. Tuesday, however, we did come out with a bang. We had a big push lower here on the S&P 500. Wanted to talk a little bit about that, and more importantly, how the candle closed, because again, you did get a very sharp sell-off to start the day, but there is very obvious dip buying that did take place intraday yesterday on the stock market. So what does this tell us about risk sentiment? Also, just real quick, if you guys could give me a sound check. Sometimes when I'm at home, my sound just auto defaults to a different microphone. On Wednesdays, we do work from home, so I believe the audio should sound good, but let me know if it is not coming clean, and I'll see if I can adjust something. So we're going to do some technical and fundamental analysis as we do every day with this or within this stream. So we're going to talk a little bit about, first and foremost, the S&P 500 and kind of what we saw yesterday. So like I said, big push lower, buyers came in, and if you were watching the stream yesterday, I mentioned this. Watch to see if there's some sort of long wick rejection at this area of support. And we did get that. So to the bulls' credit, that was a very bullish rejection of the 6360 area of support. Now, does this mean that we're out of the woods and that we're just going to go back to blue sky territories and that the stock market's going to break out here? I think that, again, if we're just going off price, it looks still very likely that you could see new highs. If you're going off of adding in fundamental analysis, I would say it's a little bit mixed. And I do think that it's fair to say that the environment that we are in is pretty choppy. And it's actually a little easier when you look at the 4-hour market structure. We take a look at this, you can see you do have buyers coming in, but you've also had an impressive and first in a while evidence of sellers also taking out those highs and pushing back lower. So from a technical basis, let's broaden it out really quick just to the weekly chart. In fact, actually what we're going to do, and I've been doing this more recently, is we're going to look at the monthly chart. The monthly chart is very useful from a big picture standpoint. Now, I know a lot of traders love trading, the 1-hour chart, 15-minute chart. So is the monthly still useful to you? Well, I guess it kind of depends. But for me personally, as I trade the 4-hour and the daily chart, the monthly chart is still relevant because what we can see here is that we are coming off of 4, arguably, I would call this a bullish candle. Yes, you had, technically the month ended red, but the rejection that we saw in April was so impressive, right? The buyer stepped in so strong. And you can see on the monthly candle how clean we had in terms of a follow through. We had 4 straight months in a row to the upside. Now, in terms of these candles, what's beautiful about this is you can also see in each one of these, look at how we've had technically a higher low and a higher high. Just by looking at monthly candles, what's cool here is that we can do some really simple definition, higher lows, higher highs. Again, did we get a higher low here and a higher high? Yes. Did we get a higher low here and a higher high? Yes. Did we get a higher low, higher high? Yes. Higher low, it was close, but yes, we did in August get a higher low, higher high sequence, right? This is why I absolutely love the monthly chart. See how easy that definition of a higher low, higher high sequence becomes when you look at the monthly? It's beautiful. So if you are somebody who is purely technical looking at the S&P 500, and we will do this same process on gold, give me just a few minutes. By the way, if you're just tuning in, hit the thumbs up button, subscribe, all that good stuff. We've got JOLTS job openings today. It could move markets, could move gold for sure. Jobs data really sensitive to the broader market, dollar, etc. If you're enjoying the stream, give me a thumbs up button. It really does help me just with the YouTube channel. So now let's look at September. September just got started, right? So this candle is very young, but do we have so far a higher high? Not yet, right? We have not yet put in a higher high on this candle. And so I think the path of least resistance, look, the trend is up. It's hard to say if you're looking at the S&P 500 monthly candle that this is a nothing but an uptrend. It's a straight up bull uptrend. What I'd be looking for if you are a bear on the S&P 500, easy definition. Can we get a break through those lows, right? You see how easy this process is? Technical analysis does not need to be complicated. People love, and again, no shade to the ICT traders or to the smart money concepts traders, but in my personal opinion and experience and interviews that I've done with many professional traders, I know like none of them that talk anything about institutional, manipulation candles. In fact, every institutional trader I've ever asked, they rarely look at very much technical analysis at all. They all seem to focus on fundamentals first and foremost. Anyways, that's another topic for another day. Long story short, keep your technicals simple. That's all you need. What I'd be looking for if you're a bear would be a true break of structure to the downside, right? A break of this sequence, a lower low, lower high would really confirm, okay, we may actually have something here of substance. Take a look at how when we first had a lower high, lower low, the following month was a complete meltdown. It did reverse course. And so that is where, you kind of had the reversal of that nature within the candle, but that's where we can drop down to the weekly chart, right? So we can look at the weekly, we can look at the daily. Again, so many traders are so obsessed with the 15-minute, the 5-minute, the 1-minute chart that they often miss the context and overall macro view, right? As well as the overall technical view. Look at the higher time frames. It gives you, we're human beings. We operate on a 24-hour cycle. And so the daily chart has some sort of nuance. It has some sort of voodoo black magic all over us, right? It matters. Monthly and daily candles are very cyclical to our nature as people. Yeah. So weekly and daily charts is what I trade, just as Nick is explaining. Ball out, man. I am my favorite chart. Anybody want to guess? I bet if you watch my videos, this is an obvious spoiler, or you already know. What do you think my favorite time frame is? And then I'm going to ask you guys afterwards what yours is. But first, what do you think my favorite time frame is? We just got done looking at the monthly, and there's a weekly, then there's a daily, then the 4-hour chart. I do look at these kind of big four, but my favorite candle is the daily. I love the daily chart. Daily chart is very clean. And so when we get back to here, if you are a bear, right, that monthly low, the monthly low for August is all the way back around here. So I think that if we're just going off that monthly chart, but then now visualizing on the daily, can we get a break of structure below 62.40? That is really the question that would put us into what I think is a bigger bear trend. So we're not near that, right? So we can't live in a world that doesn't exist, right? The bulls are still in control. Okay, question for you guys now. What's your favorite time frame? What do you guys trade? There's no right or like, just because I like the daily chart, by the way, does not mean it is the almighty greatest of all time chart. The daily has weaknesses too, and ask any day trader, they'll they'll rant about what they don't like about the daily chart, right? I really dislike the low time frames because I think they're noisy and a lot of algorithmic trading, and they miss the macro picture a little bit. So I'm not a big fan of like the 5 minute or the 1 minute. Doesn't mean it can't be traded, and it doesn't mean that, you know, you can't trade them, but 4-hour chart seems to be the popular one here. I do like the 4-hour chart as well. 4-hour, daily, weekly, monthly, those are my favorite candles. The 1 hour is fun, 15-minute, but really, to me, the daily tells the story. The daily is my favorite one. But again, to each their own. And even if you trade the 4-hour chart, you can get the same kind of concept from looking at the daily, etc. Go figure, they are a little all correlated since it's the same underlying. Let's take a look at silver. Okay, come on, silver. Are we going to do this again? I trailed stops yesterday. We're still in the trade. Could I just ask, I'm going to plea with the trading gods, can I get this kind of move like every week? That would just be that would really make my trading a lot easier. I do not get these kinds of moves very often, but this thing is a monster. And silver, guys, if you have, you know, how when you watch somebody for long enough, you start to get their biases. You know, I'm a metals bull. Like, true and true, I love metals, but I really love silver. Silver, I think, is actually undervalued relative to gold on a longer term basis. We've talked about this with the gold silver ratio. But silver, I like gold too. Obviously, don't get me wrong. Gold looks like a monster here, and my 4-hour chart needs some cleanup here. A 4-hour chart's even hard to, we've just had such a straight shot move here on gold. Take a look at the daily chart, and it really, I mean, look at that movement. I'm feeling actually so like grateful that I was able to get into this silver trade. I mean, it barely gave me an entry. This move right here was all we got. That was the biggest pullback we've had silver in, like, you know, since mid-August, right? Pulls back. I tapped into this support level, and then it just barely any drawdown started moving in my favor. And look, my trades are not always like this. And I say that because, you know, some content creators would take an opportunity to tell you like, oh, you know, you just got to trade with my system and it's all going to be easy from there. Look, I have a lot of trades where I just stop out and have to retry, but this one worked. This one worked beautifully. And so now I have a responsibility, because if you know my system, if you are a frequent trader that watches my stuff, you know my system probably pretty well. One of the things, my promise to you is that if you watch my content, I've got no secrets to what I trade, why I trade it. Rewinding the clock for myself 10 years ago when I was first exploring trading content, I found it really frustrating that I couldn't kind of get a sense for how traders were actually trading, or I felt like they were leaving something out of it because they would want to sell you a course, right? So I don't sell a course. I have free courses available on our website. I don't sell my trading style. Now, if you want to ask what I sell the Edge Finder, which is part of my system. But again, you can tap into streams and videos and you can see the logic behind my entire trading system. There is no secrets behind it. And so that is my promise to you as a viewer, that you're not going to get gaslit, about the system into buying a course. Like, you can actually just watch the content and you can see everything about my trading style. Interestingly, silver has actually lost its bullish rating here, which I'm perfectly fine with. I think you're seeing sentiment get very bullish on gold and silver now. Let me show you. In fact, I'm almost certain that's why we lost the bullish rating. So let's go gold. Actually, it must be silver. Like, what's going on here? Okay, interesting. So we did get the put to call ratio from yesterday, and you can see, actually, surprisingly, this is still very high call demand. Like, crowd sentiment is getting very bullish on silver and gold, as we just saw, right? So if you're watching gold, we'll just do gold here as well. Take a look at where this line is, where it currently trades. So a put to call ratio just shows you the volume of calls versus puts. Calls are bullish bets on the options exchange. Puts are bearish bets on the options exchange. When this chart goes really high, that just tells you that people are super bearish on something. And when it goes super low, it tells you that people are very bullish on something. Interestingly, crowd sentiment went from kind of an extreme level to slightly less extreme yesterday, even though gold went up yesterday. It's kind of interesting. That's why I said I would have expected this thing to actually dip further into the downside, showing more more calls were in demand, right? So the lower this goes, the more bullish people are. The higher this goes, the more bearish people are, right? So people are pretty bullish on gold. It makes sense, right? People kind of chasing that hype. And so I'm a little bit cautious on the sentiment side. That's why I'm not entering new positions at these levels. I'm just trailing stops. So I'm still in the silver trade. It's going well. Gold trade, I do think has room to pull back. I wouldn't short it by any means, but if it pulled back, right, this entry area looks pretty interesting to me. 34.25 looks like an interesting pullback for me. But nothing to do here. If you're not in the move, look, I know we've had this conversation 7,000 times on the live stream. If you are not in this move, what do? I'll tell you what a lot of people will do. A lot of people look at that and say, this is outrageous. This is ridiculous. And they're upset that they're not in the long. So they get mad enough at it that they convince themselves, I should actually short this thing at record all-time highs when gold is making a breakout post 4-month consolidation. To me, that is, we've said that 2 days ago. We said that 3 days ago. Again, your system is your system. If you've backtested it and you have a reason to sell gold, I mean, I can't argue with it. If you have a system, you have a reason, etc. But what I can say is just a little bit of market knowledge, just a little bit of market intuition tells me you don't short a 4-month breakout in gold, right? 4 months we traded sideways. And now that we've got an explosive move higher, fundamentals align, technicals look great, there's a catalyst in the form of tariff concerns. That's not a move you short. Again, are we starting to get a little stretched here? Maybe. But that's famous last words if you think you can call the top. Maybe you can. Maybe you're smarter than me. Maybe you're a god tier trader. But I've done this for a long time, and I can tell you from experience, it's not a move you short. It's not a move you short. Gold breaking out to fresh all-time highs on a macro outlook that stagflation risk is real, concerns, bond yields globally rising, technicals look phenomenal, 4-month long consolidation breakout. That's not a move you short. Again, you do what you want. That's just my experience and definitely my backtesting as well. Shorting a rip higher in gold, I'm telling you what, and I say this because I know there are people who are listening who are like, I am short gold right now and it's killing me. I know, like I've been on the wrong side of those moves too. I learned those painful lessons myself. I too thought what goes up must come down, and this can only go for so long. In gold, in the NASDAQ, silver, you don't mess around with 4-month long breakouts and trying to short that. Okay? You do what you want, but that's my opinion. So if I'm looking at this, what do we do? If you're not in the move and you're like, dang, I really missed the 4-month breakout in gold and I'm kicking myself, like I'm pissed, right? Understandably. You know what you can do? You ready? Side bow. That's what you can do. No, I'm just kidding. What you can actually do is you can sit on your hands, you can patiently wait, and you can catch the next one. That's honestly it. That is all you can do. You cannot make the emotional decision to short this breakout because you're upset that you missed it, or chase this breakout because you've missed it and it's just going to keep going without me. And look, those are high emotion decision making that you just can't do, right? If we're staying systematic, there's nothing I can do here. There's nothing I can do here if I'm being purely systematic with what I do. And what I mean by purely systematic is I go to the edge finder, I say, okay, gold's bullish, technicals look really strong, economic data looks great. Let's go take a look at the chart and mark up a setup. Where does my stop go on this? Where does my entry go? If I go long here, where can I logically, with market structure on my side, put a stop? I can put it 4.25% away. That's a huge stop that I would need to put on this trade. So if I was not in this trade, and I'm not in this trade, I'm not long gold, I'm long silver. This would be my trade, right? So if it comes to me, then I can get the trade. If it doesn't, again, low key, you can bow. If my wife said that, she would laugh. If my wife loves that saying, we say it to each other jokingly. But yeah, I mean, in all seriousness, like there's nothing you can do. And yes, it stinks. Yes, the move without you hurts. Like I know, I'm not immune to FOMO. Everyone here has felt FOMO. Everyone here has been like, dang, I should have put a lot more money in Bitcoin. Oh, I should have put a lot more. But that does nothing for you today, right? That just causes you to be upset with yourself. And again, you have to, if you're going to be a trader long term, you have to get over that because you're going to miss moves. It happens. I'm long silver, so it's a little easier for me to say this in this moment. But if you've tuned into my streams and hung out with me over the years, you know many, many times, many instances where I was literally sitting here kind of annoyed, well, straight up annoyed that I missed a move on the NASDAQ, that I missed a move that I was looking for in the Russell, that I missed a move. It happens. You can't avoid it. There's always going to be a move that you shoulda, coulda, woulda been in, but you didn't catch it. All you can do is line up the next one and be patient. It's all you can do. The good news is the markets aren't going anywhere. And if you have a good system, you know, it's not the only trade that's ever going to, be a good runner. You're going to catch runners. If you have a good system, you have a good approach, right? We're super systematic on this show. I show you guys my watch list every day. By the way, Bitcoin's getting a bearish reading, and I'm actually considering taking that short. Let me look at it. Bitcoin might actually be a possible short for me. I think the risk reward on a Bitcoin short, a big Bitcoin short, as mixed in with the rest of my portfolio, which is very long stocks right now, I don't hate it. And the economic data does not favor Bitcoin, right? A stagflation type environment. I know that some people are like, making the bet that Bitcoin is going to be a big risk off safe haven if the dollar plummets. I don't know that I agree with that. I think Bitcoin still trades like a tech stock. And until it doesn't, I'm going to trade what I see, which is I see Bitcoin not behaving as a safe haven. I see it behaving as a tech stock. And so I'm actually thinking about that. That may be a trade that I place. Nick, when are you planning to sell silver? That's a great question. I don't believe I'm smarter than everyone else when it comes to trading and investing. And so when I look at this chart, I'm waiting for the market to tell me when it's time to get out. So if we come down here and test this area and price bounces sharply, I'll stay in the trade. If we come down to this area, we bounce here. If we just keep melting up, all these trades or all these scenarios, I'm staying in the move. But if we come down to this area, I've trailed my stop loss just below yesterday's intraday low at 40.20 on spot silver price. If we break below that, I will take profits on this trade. So just going to let the move happen. I'm just following price action at this point. As long as it wants to carry me, I'll keep going with the trade. If it fails out, if it stalls out, trend reverses on the 4 hour, I'll take profits on it. That's it. Why is gold skyrocketing so hard? Again, we've talked about it every day on the stream for a while. Stagflation concerns, bond yields rising globally, tariff worries. You got a good recipe here for gold breakouts. You've got a good mixture. Bond yields yesterday rose globally, which was, that was a big story. The U.S. bond year, let me see if I can, GB US 10 years, is that right? How do I look at, I forgot UK 10Y. There it is, the gilt. Yesterday you had a rise in I thought that rose more than that, but European EU 10Y, is that right? Yesterday, European, like we had a rise yesterday in global bond yields. Central banks around the world, kind of under scrutiny by the market. People a little bit worried about tariffs. People worried about national debts, etc. All of the recipes for gold breakouts. And so again, staying systematic, this tells me bullish gold is still the trade until proven otherwise, until something breaks down. Silver, gold, metals in general, commodities. We had a melt up in commodities yesterday. Oil's down today, but oil was up yesterday, right? You had copper up yesterday. I mean, it was a commodities bounce back yesterday. And now really the precious metals are continuing to follow through. So we also had some weakness come in yesterday on the dollar. I did take a dollar short in the form of a pound dollar long yesterday. That trade is starting out decently well. Took that trade inside of our Discord. So I went long pound dollar. Said I'm taking an initial long position here on GU, support being tested, willing to add another small long trade around 1.3250. I'm looking for a bounce up to the next major level of resistance. Economic heat map shows slightly stronger than expected data for the UK compared to expectations. Meanwhile, the US has mixed to soft data recently. The Bank of England remains a bit hawkish and could continue to fight the idea of cutting rates. So that was my basis for the trade. Technicals looked easy. Nice level of support here. I went long. So yeah, I do like GU to the upside. I think we could have a swing back up towards the top end of this range, around 1.3575, let's call it. So that's kind of what I'm looking for. Pound dollar, interestingly, was a bullish setup yesterday. I'm not sure. It must be like a +4 or something now. Just slightly lost its bullish rating here on Edgefinder, but we'll keep watching that one. I really looked at it based on the economic surprise meter, which was maybe something changed. Nope. UK, British pound still outperforming expectations here recently. US dollar, a little bit soft. So that's why I took the trade. And we'll see how it goes from there. What's today? Today's Wednesday. Tomorrow we'll get the new investor sentiment survey. That will be interesting to see what crowd sentiment's looking like this week. Part of the reason I liked silver and gold so much this year was this right here too. Institutional positioning is still so bullish on metals. 76% long on gold, on silver, I'm sorry, and 82% long on gold. I mean, institutions, you guys want to see gold in the last few years? Like, how crazy would it be to think that like maybe institutions just played gold beautifully in the last 5 years? Think about it. A pandemic, an inflation fear spike, war in Eastern Europe and in the Middle East. How crazy would it be to think that maybe institutions just absolutely made a killing on gold? Like, look at this. Last 36 months. Do you see what I'm looking at? So what you're looking at here on your screen, this is the COT data history. I went back 36 months. And institutions, do you see the blue versus the red? Like, keep this really simple. The blue bars, that's how much bullish positioning they have. The red bars is how much bearish positioning they have. The yellow line is just the aggregated long positioning. Institutions, for the last 3 years or so, they have been bullish the whole time, right? This is impressive. Like, sometimes other assets, you've seen them kind of like swing back and forth, like institutions are bullish, then they're bearish, then they're bullish, then they're bearish. Not with gold. The last 3 years, it's been the perfect play to be long gold. And institutions, which we've tracked on this data here, have consistently maintained a over 60% at the lowest And at the highest, they were 90% of positioning was on the long side, right? Nick ignores my comments. I apologize. There's a lot of comments coming in, and I do my best to answer them, but I've got a lot of stuff I want to get through in terms of the presentation, so I can't stop and do too many comments all the time. I apologize. Your comments are if you leave a comment on my videos, usually I respond to them. It's hard for me to do it while I'm streaming. So long story short, institutions checkmate on gold. They've done incredible. This has been a monster, masterful play. And I've watched this for this whole time. And this is why, if you look back on my channel, I too have not been I have not taken one short position in gold in the last 3 years. Only longs. Keep it simple. Track institutions. Track the macro. I mean, as far as I'm concerned, that's like some of the best stuff us as retail traders can take advantage of. Look at institutions. Look at macro. That's it. Here's gold in the last 3 years. Checkmate. Institutions played this game perfectly. And so why try and predict everything when we can keep an eye on what the pros are doing and what the macro is telling us and what the Fed's doing? That is the utility of the Edge Finder. Track this stuff. Don't ignore it. It's really important to the big moves and the bigger story that most traders are missing because they're staring at the 5-minute chart. Nothing wrong with lower time frames, but don't miss the big picture. Be on the right side of these big moves. If you don't have a copy of the Edge Finder, this week we're doing 40% off the tool. If you'd like to get 45% off while we're streaming here, send us a direct message on our website. We'll drop a link here in the chat to speak directly to a member of our support staff who can get you set up with that 45% off discount for a limited time. By the way, the Edge Finder is a one-time payment. A lot of times people are shocked by that. We don't offer like a subscription. The reason for that is because if you're serious about this stuff, yes, it's a one-time payment that is not it's not a cheap product. It's an expensive product for a reason. It's great. But we like the idea of giving it to you for a one-time cost so you can just keep using it and you don't have to pay every single month. I've been a trader who doesn't have a ton of capital. I get it, right? You don't want to have like subscriptions that are weighing into your trading profits every month. So with the Edge Finder, you can pay once. And today you can get it 45% off. So click the link. If you want to send a direct message here, you can chat with our support staff who can get you set up with that discount and answer any questions you might have about the tool. Coming up in just a second, we have got Forex James. He's returning. I listened to a little bit of his segment. Good stuff as always from yesterday. And he's back to talk more trading setups and ideas. Stay tuned. He'll be up just after this.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. How's everyone doing? Hope you're all well. Happy hump day, Wednesday, halfway through the week. Sorry, just 1 second. I need to put my laptop on charge. There we go. Cool. So there's not really too much that has gone on with me. In fact, nothing's going on in terms of the markets. There's been quite a bit of talk about Bitcoin recently. So I was talking with a friend of mine who is a little bit more knowledgeable in the crypto space, and he brought to my attention the Bitcoin dominance chart. I've got no idea what Bitcoin dominance actually is, but I know it's important. But again, I'm not 100% sure what it is. But again, I wanted to have a look, and it looks quite interesting on a technical view, so I thought I'd bring it up. If anyone might know a bit more than me, that's completely cool. Royal Trades, hello. Bashi, hello. Ball Out, good to see you. Shells, hello. Nice to see some familiar faces. Someone just put JOLTS in the chat. We do have news coming in. Let me just double check what time that is, just so I don't miss it. I don't even know if it's during my segment or if it's already happened. JOLTS is in 25 minutes, so I will be here for JOLTS. So Bitcoin dominance chart, again, I'm not 100% sure what this means, other than the fact if Bitcoin dominance is reducing, that as far as I'm aware, means that more capital is flowing into altcoins or smaller coins than Bitcoin. Obviously, dominance is kind of in the name. Bitcoin is less dominant. So we've got the Bitcoin dominance chart currently down at the 200 Bollinger Band. Now, this means one of two things. Either we could see a reversal or a mean reversion, possibly back to the 200 moving average, which is right here. Or what we often see is this Bollinger Band can be a signal that we are actually heading much lower. So it's kind of like what we saw here to the upside. It's a little bit more rare to have this. This is more of a signal that something's wrong, in my opinion. That's just the way I use it. So as we see right here, it doesn't mean that we're going to have a mean reversion or a reversal, but it can mean that we are now in a very aggressive trend to the upside, and we could now see that to the downside. Now, the reason I'm bringing this up is because we saw, or we've currently got the Edge Finder reading Bitcoin as a bearish -6. So that means we could potentially look for some Bitcoin shorts. Now, again, I don't trade Bitcoin. I like to preface that every time because I'm definitely not an expert in this field when it comes to crypto. But again, I like to have a look from time to time. So there is an idea of something like this, trading off the sort of retest and the break and retest pattern we've got here. We've also got an established trend to the downside on this, micro trend, if you want to call it that. So there is an idea of that. The H4 is in a downtrend here. We've got a very nice 200 moving average, 50 moving average trend here. We've got a couple of H4 candles showing rejection to the upside. That's as far as it goes for me. I don't know what's going on the the driving factors or the fundamental side of Bitcoin. So I'm going to leave it there because I don't want to give anyone ideas that, are basically 50-50. Okay, thoughts on US dollar CAD? We can have a look at that. James talking about Bitcoin, time to short. Yeah, well, we'll see. Just quickly, US markets opened quite mixed. We've got the NASDAQ down on the open. We've got the US 30 or the Dow Jones currently running higher, not by much. We've still got a lot of left side room to correct or to potentially correct from the sell-off we saw yesterday when we saw the US dollar rally, risk off. Oh, sorry, my camera's cut out. It does that sometimes. It's frustrating, but I'm still here, so don't worry. What was I talking about? Yeah, the VIX spiked yesterday. So we saw indices markets down, so gold up, we saw dollar up, and risk assets generally down across the board. No, I don't want that. So gold, silver remain exactly the same. Still looking to be a buyer if we can get a retracement back into either the all-time high. I'd be willing to be a buyer there with lower risk, or ideally we come back down into sort of the previous highs. It's not working. There we go. So previous highs around 3,400-ish, that sort of area. Keeping it very, very simple. Nat Gas has had a bit of a rally today, so I'm sure Ballout's happy about that. He was talking about being a buyer of Nat Gas. I'm not sure if he's in or not. Euro dollar continues range bound. We did see a drop yesterday, again, on that US dollar dominance that we saw. Overall, very little to do when it comes to euro dollar. There is absolutely no trend here. There's nothing to trade off, in my opinion. We've got horizontal's the right word, isn't it? Horizontal moving averages. Price action is just up and down. Yeah, absolutely nothing to do. I do lean more towards the long idea, but again, there is no way for me to get into that position. The DAX did have a little bit of a comeback this morning. Not really anything substantial. It seems to be selling off a little bit again here into New York Open. So we might end up seeing the DAX come down to retest the low from August at 2300, 454. That's definitely a potential. Good luck to short DAX. So US dollar Swiss, I would, again, quite like to be a seller of this one. I'm quite happy to sell some dollars. Nothing too crazy. Definitely wouldn't get overexposed or over leveraged, but I don't see an argument really to be much of a buyer right now. I think the selling narrative is taking control. And I think there is the possibility that the pop we had yesterday is just providing some good selling opportunities within dollar assets or dollar pairs. Aussie yen has come up to the area I was discussing yesterday, I think it was, where we were looking at the previous highs here for a potential triple top to go short. However, it's looking precarious. We've got a very strong previous H4 candle. The current H4 candle's only been open for about 40 minutes, so we could possibly be looking at the bottom wick before we end up higher. So I'm just going to sit on the back seat on Aussie yen for now. If we do end up seeing this H4 candle close bearish, I might attempt a short, but I'm not going to get too ahead of myself. I'm still bullish on the yen. But as we saw at the start of the year, being bullish on yen hasn't been very fruitful. It's been very, very difficult really to be sat on the bullish side. CAD yen, same idea. Would love to be a seller of the CAD yen. I think the Canadian economy is crumbling. I think that we've got a really nice central bank divergence there between the SNB and the BOJ as well. Same thing with dollar yen and New Zealand yen, exactly the same thing. We've got the RBNZ that's expected to cut rates 2 more times in 2025. And then again, we do have the Bank of Japan expected to hike rates in October. So there you go. There's the quick fire watch list. Again, it's not changed too much. So I do apologize if that was just me repeating myself from yesterday. Still in the New Zealand US dollar position from yesterday. I'm not personally in this, but it was sent by one of my traders. So I've got that marked up. And I think someone asked for the US dollar CAD. So let's get onto that one. Let's see. The H4 isn't telling me much, to be honest. I don't see really anything to go off of. So let's go to the daily and see what we've got here. We are underneath the 200 daily moving average. We're at quite a fair price, I would say. I mean, it's not really extreme prices. We're not too cheap either. I'm just going, well, I'm basing that purely off price action, not on a fundamental value view. So I think from a fundamental view, I would rather be a buyer. Although I'm overall quite bearish on the dollar, I think the Canadian dollar is in a much worse position. So I did make a video about this on my channel, but I'm going to go over it here because I think I don't really have anything else to talk about today. So I'm just going to give you a quick look into Canada. So what we're looking at is GDP growth. You can do this on the Edge Finder, by the way, but all of my research for this has been done on Trade and Economics because I go into some things that the Edge Finder doesn't have. But Edge Finder on sale, get the Edge Finder, use code ELITE. Very, very good tool. So GDP growth annualized decreased to negative 1.6. So that's a tick in the bearish category. We have got the current account is in a massive deficit here of negative 21.2 billion. Really, really poor deficit that we've got going on there, or very concerning, I should say. Government budget is negative 2.1. Retail sales took a hit to negative 0.8. GDP monthly, I always have trouble finding this. Where's it gone? Here we go. GDP monthly did have a slight pop to the upside after 3 consecutive negative prints. But again, is that enough? In my opinion, definitely not. Unemployment rate is still pretty high. I mean, it's not anything wild. It's relatively stable, but it's still elevated in my opinion at 6.9. Did come down from 7. We have got employment change is negative. There was something else as well, but I can't remember what it was. Trade, it was exports, that's what. And this is why the current account deficit, a big contributor to the current account deficit is the exports. Again, my camera's cut out. I do apologize. Now, of course, this is tariff related or tariff driven, but it doesn't take away from the fact that their economy is still very weak. So their exports have been on a downward slope since the start of the year. You can see throughout 2024, we actually saw an increase in exports. As soon as we hit 2025, we started taking the hit as soon as Donald Trump came into play. However, we are seeing a slight increase, but again, exports very low, current account deficit very large. Overall, their economy is just looking very, very weak. And then we pair that with the S&B not being hawkish, to say the least. So that explains my CAD opinion. Again, I've nutshelled that quite a lot. If you do want the full breakdown, I've got a video on it. But hopefully that shone some light. I think that's the right way of saying that. Also, I saw Lee earlier say hello, James. I forgot to say hello back. Lee, hello, it's good to see you. Bashi, there's a thunderstorm. Is there? It's quite calm here, I think, where I'm in the UK. Perfect weather to stay in for pizza and cake. I had I had a, what did I have? I had a Domino's Texas barbecue pizza the other day. I don't normally get stuff like that, but I've got to say it was delicious. How's seasonality for nat gas? I have absolutely no idea. I don't have the seasonality tool I used to have, so I couldn't tell you, unfortunately. I think I searched for it actually on Google. I couldn't find anything on nat gas in terms of seasonality, other than, you know, like supply and things. But I want like a just price action. Again, my camera's cut out. I do apologize. I know it's maybe a little bit annoying to watch, but sadly, I can't do anything about it because my computer wouldn't connect, or Google Chrome wouldn't connect to my webcam. So I'm having to use OBS to take my camera. Then I'm using StreamYard to pick up OBS, if that makes sense. So I'm using like 3 different programs just to have my camera on today, so the connection's weak. Apparently Chicago has top-notch pizza. You know what? I would love. Oops, JOLTS. It's fine. We've still got 13 minutes. Don't scare me like that. It's all good. I'd love to try one of those deep dish pizza. You know, the ones that are like basically just full of cheese. I'd love to try one of those. We don't really get those in the UK, though. We get very boring pizza, just, you know, bread, tomato sauce, and cheese, and a bit of meat. James, what's your view if reciprocal tariffs decision is overturned by Supreme Court? It's a good question. I think we're going to see basically a repeat of what we saw yesterday. I don't think we're going to see. So obviously, when tariffs hit, we saw gold up, we saw indices down, dollar was down as well. I think it'll be pretty much the same. It'll be I don't know. I'll be completely honest. There is an argument for it to be risk off, because that is obviously a big reversal in geopolitics and trade. But I suppose it could be viewed as optimistic. I would say it's going to be risk off, but don't quote me on that, because I'll be completely honest. I'm not 100% sure. What MAs am I using? I am using a 50 and a 200 here, just exponential moving averages. I should probably look into that court ruling a little bit more. Yeah, I've been a bit distracted. James, depends where you go. There's great pizza in Covent Garden. Is there? Interesting. You know, it's funny. I would never go out for pizza. Pizza is not something I would go out for a meal. It's like, oh, I want to go out for a pizza today. It's like I'd go out for Italian or Korean, or, you know, I don't know. I would just never think to go out for a pizza. Pizza to me is like what you would order on a lazy day, or if you can't bother to cook. Euro dollar looks like it's going down. Let's have a look, see here. It might do on lower time frames. Obviously, you know, if you are a scalper, maybe there is some room here, but from a swing trading view, there is just really nothing to do. It's, you know, choppy range. I suppose what you could do is maybe have a buy limit here, stop loss below the low here at 1.15, and maybe a take profit at the high and just trade the range. But other than that, I can't really see a trade idea coming. Anybody from Glasgow? No, I went to Edinburgh. I think last year. Edinburgh's lovely, but yeah, I've heard really bad stories about Glasgow, so I don't think I'll be going there. Alan, you know, I've not heard from Alan in a while. Is Alan still with the A1 team? I don't really hear anything of him. I've not seen him on the streams or his YouTube or anything. He seems to have just disappeared, which is sad. I like Alan. He's a cool guy. Give us your ideas about DXY. Absolutely. Okay, so let me first of all start with the Edge Finder. Bearing in mind we do have JOLTS incoming. I'm saying that kind of for my own reminder. Okay, so GDP did pop to the upside quite nicely. Previous was negative 0.5. Actual came out to 3.3. Really nice divergence between the actual and the previous. However, the forecast, it was still a surprise to the upside, but it wasn't anything overly crazy. However, that's still a tick. Again, cameras out, I apologize. Still a tick in that bullish category. Manufacturing PMIs are down. We had those yesterday. So again, showing a little bit of contraction. Services did services was okay, but still underperformed forecast, so technically a tick in the bearish category. Retail sales are okay, but again, not good, or not good compared to forecast at least. Anyway, overall, we're getting a relatively bearish outlook on the dollar. So we've got 45%. So it's not super, super bad, but it's definitely not something I would be overly optimistic in being a buyer of. So JOLTS is what we've got coming pretty soon. Previously did underperform. Again, when I say underperform, I'm talking relative to to the forecast. So what do we have forecasted today? So JOLTS today, we are expecting 7.4. Previous was 7.44. So it's expected that we're going to have another poor release for JOLTS, which would, of course, be another tick in that negative box for the dollar. So with that being said, I don't see an argument really to be a buyer. Long term, absolutely. I think, if you've got some sort of long-term DCA or long-term idea, when I say long-term, I mean over the next 12, 24 months, 3 years type of horizon. Short-term for us, measly swing traders and day traders, I think being a seller makes much more sense. So we've still not recovered fully. MYR 190. I'm not sure why that's highlighted. I don't even know what that means. So we're still not fully recovered, or not recovered at all, from when we had J Powell speak. I think it was last Friday or the Friday before. It's one of the Fridays. We did have a correction, but we've not managed to pop back up. And again, the US dollar's overall fundamental view at the moment is relatively weak. So I would be looking to sell rallies, really. Like we saw yesterday on this rally, I'd be looking to go short. If we see a rally today on JOLTS, maybe then I'd be looking to sell this high here, if we do create a sort of a third high. So hopefully that answers your question. Turkish shawarma. I do like a shawarma. To be fair, there's not really any foods I don't like. If it's edible, there's a very, very high chance I'll eat it. Got 7 minutes till JOLTS. Okay. I'm just thinking, is there anything I've missed before we go into news? Bashi doesn't know what food is. Right, I'm going to put JOLTS on screen just for a visual reminder, because I've got a really bad habit of forgetting that news is coming. Does weak JOLTS data signal rate cuts this month? I think we're pretty much set for rate cuts this month, regardless of what JOLTS is. So JOLTS tells us how many jobs have opened. So if we get more jobs opening, generally that's better. Labor market's doing okay. What's my view on oil? I have absolutely no view on oil. I'm completely 100% neutral on oil. I've got no opinion whatsoever. Here we go. Ball outs. What's your take on lean hogs futures? Ridiculous. I'm not even sure I know what a lean hog is. Is that like a skinny pig? I've got no idea. I'm getting a phone call. How do I stop that? Okay. Trading ruined my life, guys. I wish I didn't know this field. Lost my money and my family. Did you deposit your family? Which broker takes that? I'll do that. I'll deposit my dad. In return, I'll get 1,000 to 2,000 leverage, and a $500 account. Sorry, I probably shouldn't be joking about that. So why did trading ruin your life? Is what I want to know. How did that happen? When are you adding cattle to the Edge Finder? Yeah, I don't. I think that would be the least clicked on asset on maybe on Google. It might not even get indexed by Google. You'll deposit Bashi. I feel really bad. That was a really impulsive response. I think that guy maybe needed a bit of emotional support, and I just laughed at him. If you're still here, I apologize. It's not personal. It's just the way I am sometimes. Your trade idea to short USD JPY was trash. Well, it sounds like your idea to take the trade was trash because I didn't take the trade and I'm fine. I didn't take any losses. The idea is still completely valid, being an NBF. So don't blame me for your poor executions. If you watched my content and you thought, oh, there's a guy on my screen telling me to sell US dollar yen, that's your problem, not mine. James, cattle is surprisingly easy to trade. Look at the chart. I don't even, how am I going to do it? I don't know what the ticker is for cattle. Where's my emotional support cat? It's a good question, actually. I don't know where he's gone. He must be sleeping somewhere else. Unprofessional. Good. I'm not a professional guy. You know, I'm not here to give you financial advice. I'm here to be slightly entertaining, give my personal opinions on things, and that's it. There you go. Ball out knows the UJ short is valid. Yeah, so we've got 3 minutes. So let me just have a look at UJ and explain what I am talking about here. So I made a reel talking about possibly selling dollar yen in the middle of this range, obviously when the market was at the middle of the range, somewhere around here. But I also said, or maybe I didn't, but just because I make a reel on something or I make some content on something, it doesn't mean I'm 100% taking the trade, or it doesn't mean I'm 100% taking the trade as I've made the reel. It means that's my analysis, that's my theory. If market moves, the market moves. Maybe I'll enter higher, maybe I'll enter lower. You know, it's just the way it is. It's your due diligence to decide, first of all, is it, you know, do you like the analysis? You know, if you don't listen if you don't want to. And if you do listen, it's still your own job to figure out where to get in. James yesterday was scrolling on YouTube and some kid was trading live SMC and I was trolling him. The guy was wait, hold on. The guy was possessed. I saw he was going to come out the phone. Yeah, some people are like that. A gold buy or sell? Neither. Just wait. This guy said, thank me later. Yeah, you can thank me later. It's crazy. It's crazy that I give you real fundamental analysis. You take the loss, and that's my fault. Crazy. Some real entitlement. I divorced my wife because I lost all our money and she took custody of the children, trading as a cause of divorce. Rabbi, I'm in a mood today. That guy's annoyed me, so I'm going to give you a bit of a harsh truth. It's not because of trading, it's because of you. You took the decisions that you made in the markets. We've got 30 seconds till news. And I know I'm being harsh. I don't mean this in a horrible way, but you cannot blame the markets. Although it is horrible. Obviously what happened is not good. I do take sympathy with you because I'm sure the majority of traders lose something, whether it be financial or relationships when they start trading, because it is very time intensive, very capital intensive. Actually, generally very capital draining at the start. So let's see what we get. Lower JOLTS. Let's see. Let's go to the dollar. Let's go down time frames, 5 minute. Dollar is down. There we go. So dollar's initial reaction is to the downside. Less job openings. Not good for the dollar, not good for the labor market. Bearing in mind, it's not just lower JOLTS, it's also the fact that the actual result disappointed investors. And this is what's key. When we look at news, it's not just a case of, oh, the previous was this and this is the actual. What we should be doing is exactly what the Edge Finder does when we look at the heat maps, the economic heat maps and the surprise meter, where you're comparing the actual to forecast. So even if this actual is an increase on previous, if the forecast is disappointed, investors aren't happy, and they are the people that are moving markets, really. So dollar is down off the back of that, which isn't a surprise. So that is, again, another tick in that dollar bearishness idea, or dollar bearishness box. So there you go. To the guy who lost money on UJ, I hope you're feeling the pain, because UJ is now down slightly. Sorry, I'm on a little bit of a tangent today, or a little bit of shooting my shots, but please note, 90% of what I say is meant to be taken lightheartedly and as a joke. Ball out got it right. Ball look at Ball out in the chat. Who would have guessed? I don't know, Ball out. Who types in the chat that dollar is going to go down? Yeah, that's a good analogy, actually. If you fail school, it's the teacher's fault. In some cases, it is the teacher's fault, I would say, but generally, it's not. Why is everyone trolling today? To be honest, I'm kind of enjoying it. It gives me some easy things to talk about because I've got nothing going on in the markets right now. Cold J, I appreciate the support. I also wouldn't say he's a terrible trader. I would say he's probably a newer trader that saw something and took it at face value, which is understandable. I might have done the same thing in my early days, but this is a lesson to him to not mindlessly enter a trade just because he saw someone talking about the trade. Dollar is really not happy on this news, is it? I've just realized I am running into Marco's time. I do apologize if you're here, Marco. Guys, my time is done. I'm actually 2 minutes over. So Marco's trading journey is here to take over the show. Have a good one. Stay safe. You're in great hands with Marco. I don't know if I'm on for the rest of the week. I probably am. Might not be. If not, I'll see you all next week. If I am, I'll see you soon. Stay safe and have a good time.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat, as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello everyone, welcome to my segment of the live stream. So if you have any questions, any chart requests, you want to see anything you want me to discuss or discuss anything trading related, definitely put it in the comment section. So we had some news. Euro dollar. Damn, that's quite a big reaction actually on the euro dollar. So we had the JOLTS job openings. So let's take a look. So it came in a bit lower than the forecast. And if we take a look at the Edge Finder, I don't think it's going to be updated just yet. But let's take a look at the US economic heat map. Let's see, job openings. Here it is. So not yet updated, but the last one also came in lower than the forecast, which is bearish for the currency and bearish for the stock market as well. So it kind of makes you feel that or it kind of represents a possible slowdown in the US economy. So this is possibly good for the rate cut story. Now, rate cuts are actually bullish for things like the stock market, for gold, for silver, anything that is paired. So anything that is paired with the US dollar is pretty much going to benefit a rate cut for the dollar. So let's get into it. For today, what do I have on the watch list? I have pretty much the 5 same things as I've had for the last few weeks. So NASDAQ, silver, or sorry, actually gold, silver, euro dollar trade, euro GBP trade as well. So I'm in 2 trades, looking to take 2 more on gold and silver. So let me see the DXY right now. What is the DXY doing? So the DXY is looking pretty flat in this area. Okay, it's looking pretty flat. Yeah, rate cuts are coming, so we could see this go a bit lower. I don't think we're going to get a massive reaction. I think the rate cuts are mostly priced in for the dollar index. So I do think if we do move lower, we're going to hit this support level. I don't think we're going to break that level massively and drop, let's say, to 93, 92. But I think we're going to just stay around this level, maybe range around like this for now. Because, as I mentioned, rate cuts are most likely priced in. As far as the stock market goes, so the S&P 500 is actually looking, I mean, it's looking bullish overall. If you zoom out, definitely looks very, very bullish, kind of respecting this 20 MA, so looking pretty good. Although for buy setups, I would like to see a pullback, pretty much the same scenario as for the NASDAQ. So I'm looking for pullbacks to some support levels. Let's say this one, or this one right here, okay, for some support levels. So if I was a buyer, I would be waiting for those pullbacks. I do prefer the NASDAQ. As I mentioned on the yesterday stream, I think artificial intelligence is going to have a bit of a bigger impact on the NASDAQ. So should make the NASDAQ move a bit more, should introduce some more volatility compared to, let's say, the S&P 500. So that is it for the DXY and the S&P 500. So my forecast, my analysis is pretty much the same, has been the same for weeks now. Nothing has really changed. The big change was Powell speaking. So when he switched from a bit of a hawkish to more dovish tone, that was definitely a change in the markets. But other than that, we haven't had any significant news. So there was some rumors that Trump was dead or half dead or in the hospital. That turns out to be false. So Trump, I think he's doing okay. I think nothing is wrong with him. So it's going to be the same old usual stuff with a huge amount of press conferences and huge amount of news coming from the White House. And let me see the comments. Quite a lot of comments. Okay, let's see. Let's see. DXY falling hard. Hey, ball out, what's up? And if people push it up, so this is a short downfall for now. Hi, Marco, what is the JOLTS effect on the S&P 500? So I believe that you have to watch out for the rate cut story. If you're looking at this JOLTS data, you have to watch at, well, basically what the Fed is doing. So if you go to the DXY, 1 hour, if you get poor economic performance of the United States, the Fed may be more inclined to cut rates even more than expected, and that is short dollar, but actually bullish for stocks. Now, it kind of is also a problem because yes, rate cuts are bullish for the stock market, right? Rate cuts are bullish for the stock market, but also if the economy is slowing down, that is bearish for the stock market. So you kind of are getting more of a neutral reaction on things like the Nasdaq and the S&P 500, right? The reaction is much more pronounced on the DXY, on the dollar. So for the stock market, it's more of a neutral thing, right? It's good and it's bad. It's a case of both. So, but generally, if you're looking at the numbers, so the job openings were a miss, right? Came in, I would say, pretty lower than the forecast. I mean, 7.18 forecast was 7.4. I would say that was quite a significant miss. So you would expect a bit of a bigger reaction here on the DXY. So it's all about the rate cuts. It's all about the Fed. It's all about the central bank and what is the Powell and the gang. What are they gonna do? And if people push DXY back up just for short term, possibly to 99s, and then we get buyers, okay. Will this push gold up? Well, it should, because it's a rate cut story. I mean, so far on this 1 hour chart, there hasn't been a huge reaction. The reaction is a bit more neutral, but overall, weakness in the US economy means rate cuts, means gold and silver should go to the upside because it means a weaker US dollar. It means also more printing of money, more spending, possibly more inflation. And to cover for inflation, so to hedge their bets, investors should be interested. So investors could be interested in buying up gold and silver. Will this push US 30 and Nasdaq 100? So, okay, we just covered that. Lee James says, I think NFP will be weak. There has been no surprise in terms of jobs data over the last few months. We will see. Who even believed he's dead? He should have re-entered. Shoulda, coulda, woulda. So euro dollar, yes, sure. GBPUSD, really bearish long term. Okay, so euro dollar, GBPUSD. Let's see. CAD yen. Okay, so euro dollar right now is being super flat. Just super flat, super range bound. Not really moving anywhere. So my position has just been paying for the swaps, paying for the fees, which is not the best thing, but it is what it is, basically. I did get taken out with this candle on my personal account, but I'm still in on my prop firm accounts and my Darwin X account. So yeah, personal is out, but some accounts are still running this position. I don't know why the data was different, but on my IC markets, you had quite a big drop to the downside. So right now, well, I'm bullish. Okay, I am bullish. I think the data coming out of Europe has been looking pretty good. Lately, it has, I think, switched to more of a 50-50 reading. But the dollar, I am expecting rate cuts. So if we can get to these levels, I think I'm going to take my profits. Okay, I don't really plan on holding this position for too long. So I don't really think we're going to get a massive explosion to the upside. But if I can place some take profits at, let's say, 1.179 and get out of this position for a bit of a profit, that would be pretty good. And the same thing I'm planning for the Euro GBP trade. I have my take profits set around this level, okay? Around 0.873, somewhere there. Because I'm also not seeing the sort of reaction I want to see. I'm not seeing a huge move. Whoop, just a second. So I'm not seeing a huge move. I'm not seeing a huge reaction. And that is why I would much rather get out if we go to these highs and quit paying for the swaps. yeah, so these positions basically are not as good as when I entered them. And I thought the reaction was going to be faster, more fierce, more momentum. That hasn't really happened. Long-term forecast, well, if the rate cuts do continue, I do believe eventually we could see a bit more outperformance of the euro against the dollar. Let's check also on the Edgefinder top setups reading right now. So what does the Edgefinder say? Euro USD. Bullish. So a bullish reading right here on the Edgefinder. But I think it's a bit of a stale position. So I'm no longer very, very bullish on this currency pair. I would actually be more patient. I think there's better opportunities out there. I think there's more interesting opportunities out there, such as right now, it's going to be gold and silver. So that's my thinking for euro dollar. As far as GBP USD goes, GBP USD, let's take a look. Just to repeat myself from yesterday, I'm bearish on the pound. I'm betting on sort of a stagflation scenario where you have bad GDP growth, you have rising unemployment, you have rising inflation, and that sort of an environment is very tough for the Bank of England to cover. So very tough for them to put under control, and that is called stagflation. Okay, stagflation is usually bearish for the underlying currency because it lowers the demand. So it could lower the demand for the pound, thus pushing the prices higher, thus, let's say, pushing this chart lower. But here, I would say this is an even worse chart than the euro dollar because GBP I'm bearish on. So I'm bearish on the pound long term, and I'm kind of bearish on the dollar. You know, when I looked at the DXY, I do think we can hit, let's say, these lows. I do think we can go back to these lows. So that doesn't usually create trends. If you're trading currency pairs, you need one currency to be very strong. You need the second one to be very weak. If both currencies are strong, or if both currencies are very weak, you're not really getting the best opportunity. You're not going to get a trend. So what does the Edgefinder say? GBP USD. Neutral reading here. Let me check on the UK heat map. So it is bullish. The heat map is bullish. I'm just worried about that stagflation. Okay, so I'm just worried about that stagflation, and I wouldn't really trust the GBP to gain a lot of value. So I think, again, summary, this chart doesn't look good. It looks pretty flat, it looks pretty corrective. I think there's other better opportunities out there. And I think both the GBP and the US dollar are kind of weak. Both currencies are kind of weak. So then we had another request. Let me just see CAD yen. Okay, CAD yen, let's take a look. JPY. Let's take a look at the Edgefinder as well. CAD JPY. Neutral reading here on the Edgefinder. So yeah, basically neutral reading here. As far as the chart goes, and you're asking me possible short. I don't know. First, I'm not getting a clear reading from the Edgefinder, so I'm pretty much getting a neutral one. Chart looks pretty flat. I would say I don't have a bias in this one, to be honest. I don't have a bias. We are approaching sort of these highs where you could maybe take a short, but again, I don't think you have the fundamental background. I also did check the Canadian dollar for the stagflation story, and there is some opportunity for the Bank of Canada to cut rates because I think their inflation is below the target, so below 2%. That should be bearish for the CAD. They could cut interest rates. But I do prefer more of if there's a stagflation, I do even prefer that than just cutting rates. So here, you could be a bit bearish for the CAD, just if you're looking at what the central bank could do, you know, because when you look at the Edgefinder and you go to GDP, you go to CAD, it's all over the place. Not good. If you look at the unemployment, it's going to be rising. Rising and definitely above 4%. Okay, rising and above 4%. And if you look at inflation, there is some room for them to cut rates and maybe raise the inflation. See, so the inflation, current inflation is below the target. It's 1.7. There is some room to cut rates. So yeah, now that I think about it, you could be a bit bearish here, although I would wait for a confirmation of the top setups. And I do have to do some work for the yen because I currently don't have a clear reading on the yen. Okay, let's see. Euro USD breaking the hourly 200 EMA to the upside could lead to continuation if we close above. I don't know. I think euro dollar is just it's stuck. It's stuck right here. Looks pretty flat. Looks pretty stuck in this range. So I'm not seeing much potential. I don't think if I'm going to become bullish as far as technical analysis goes, I would need to see a clear breakout of these levels. You know, like this. So definitely a clear breakout. And if we just continue ranging around, approach the highs of this range and not really break them, I wouldn't say that is very bullish. So until we break out of this structure, I don't have a clear, like very bullish reading. Yes, I will remain in my trade, so I'll remain in the position. But what I'm betting on is to sell a rally. So if a rally happens like this, I will most likely take my profits. I'll most likely close this position using a take profit. Of course, if you're in the A1 Discord, you're going to get updates about that because this was a signal in the A1 Discord. But I don't have the confidence that I had on the 13th of August. I definitely lost some confidence in regards to the bullish scenario. So GBP/USD pullback, I think it's going to remain flat. You know, as I mentioned, both currencies are pretty weak. That means flat price action. So that usually leads to flat price action like this and not a lot of movement. Hey, Aaron, what's up? Marco, explain, how does gold keep buying? I thought the market needs liquidity to move. Well, the thinking is, from what I've been reading, from what has been happening this week, is you have a lot of investors, a lot of hedge fund managers, a lot of pension fund managers. They've been on vacation. You know, they're human, just like us. So most people take a vacation in August. They're back. It is September. They're back at their desks. They're looking at the situation. They're looking at the markets, and they're noticing the U.S. economy is doing well. So U.S. doing well, and rate cuts. So you're going to get rate cuts into an already, let's say, hot economy. And inflation is still above target. So CPI for the US dollar, USD, still above target, still above 2%. And now you're going to get rate cuts into that. That will spark inflation. That is a big concern for investors. That makes investors hedge, and that makes them invest into gold and silver. So they probably came back to their desks on September, did their analysis, and noticed, crap, we need to reduce our exposure to the US and, let's say, the dollar. We need to buy gold. We need to sell bonds. You know, look at what is happening to the price of bonds, TLT. Shit. Okay, this was yesterday. This was pretty low. Now it's back to these levels from last week. But basically, the thinking is also they're going to sell bonds. Okay, they're going to sell bonds because the US is not doing well. The US is doing well, but inflation creeping higher. US administration is influencing the Fed. Trump is getting more and more influence into the Fed, which is not good, which creates some uncertainty for the future. So that's basically it. You have a lot of big players who have gone back to their desks, reevaluated the situation, and now they are heavily buying gold. Okay, and it all makes so much sense. Like, look at end of August, 1st of September, boom, breakout of the range, right? Silver, 1st of September, boom, explosion out of the range. So 1st of September was even a Monday, which is pretty funny. So it directly correlates to people coming back from their vacation and putting on a huge amount of size and basically executing very large positions. I think this can go a lot higher, even though there is no, as you mentioned, liquidity. Well, there is always buyers. There's always going to be some buyers, especially the bigger players. They cannot get in at once, so they need to buy chunks, little chunks here and there. Maybe the buying lasts for 2 weeks. Maybe it lasts for 4 weeks. Maybe the buying lasts for a month and a half. No one really knows, but when you have huge positions, when you have huge capital, it takes a lot of time for you to execute the positions that you want. So let me give you some examples. Here, this rally, look how long that one lasted. So look at this one. Look at this one. That is why it's really bad to try and call a top. See, this is what has initially happened. So now we are kind of at this stage. Now we are here, and we can still get a massive explosion higher. Also, look at this. You would say this is overextended. Boom, goes up even more. So that's the markets. Crazy stuff. Poor Canada. Why would you say poor Canada? Gold will keep moving higher because the world is in such a bad state right now. Trade wars, court rulings against US tariffs, actual wars, the UK about to collapse, BRICS plotting to destroy the USD. Yeah, what's happening in Canada? It's really cold. Okay. Let's see if we have any more requests. NASDAQ 100. Okay. So let me repeat myself for the NASDAQ. I'm looking for pullbacks. So long term, I am bullish. Long term, I am bullish, but I'm looking for pullbacks to these support levels. Okay, looking for pullbacks to these support levels. Why? Because I think we're a bit overextended here. If you look at the top setups, NASDAQ, neutral reading, see? So commitment of traders looks like commitment of traders, institutions are bullish. Retail is actually bearish. Okay, so retail is bearish, so you want to be bullish. Seasonality is negative. If you check on the seasonality, September is not usually the best month. If you go to the monthly seasonality, let's see, NAS. So this is the last 10 years, and yes, definitely. So September is a bit negative. What is pretty good is that November and December are very positive. So November and December are usually great months. It is kind of the Santa effect or something like that. Basically, spending goes up in November and December. People are closing their year. People are buying gifts. People are spending money. So yeah, okay. So let's see, USD yen. USD yen, and that is probably going to be the last one for today. Okay, let's do Oanda. So What did you say, Marco? They got bombed by a Houthi drone. Did you not see the news? And then OT says that he's joking. I was about to open up my financial juice, but okay. So USD yen, let's check it out on the Edge Finder. USD JPY, bearish. I would be bearish as well. USD rate cuts, yen possibly rate hikes. That's what they said. That's what the Bank of Japan said, that they may hike interest rates, which is good for the yen. That will make USD yen go down. Now, you look at the chart, you look at the technicals, it looks flat. Yeah, OT is turning into ball out. What the fuck? But basically, USD yen being flat here. I want to see a breakout. If I'm going to go short, we do have a bearish reading. I would like to see a break of these lows. Okay, I would like to see the break, the break of these lows with momentum, and then some sort of an entry. So I don't think it's ready right now to short. I do have an alert set, as you can see. The best thing to trade right now this week is, as I mentioned, gold and silver. So gold and silver to buy. The problem with this is, and that's going to be the last thing I say. So the problem with gold and silver, it's just running away from me. So I had 2 buy limits, did not get hit. We exploded higher. Now I'm being more patient. I don't really want to buy when we are so overextended, so far away from 20 MA. If we do catch up to the 20 MA a little bit, then I'll get in. As far as the current price action goes, it's overextended. So I'm looking for a bit of a pullback. That's kind of the sad story in all of this, because I'm seeing it move. I'm seeing it explode. It's just that we're not getting that pullback. And I unfortunately did not get in time. But hey, that's it. That's trading. There will be more opportunities out there. So that's about it. I am running out of time. I will be here tomorrow, so you can catch me at 10 a.m. Eastern Standard Time. So good luck with your trading, and let's see what NFP will bring this Friday. Thank you, and see you in the next one.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.